Ramkrishna Forgings. It's been a strong quarter. Lalit Kumar Khaitan is the ED and CFO now joining in to discuss numbers. Good to have you on board. To begin with, it's been a strong domestic growth this time around. What are the factors at play, and do you think that this double-digit growth will continue into Q4 as well?
Yeah, sure. I think we are in a very comfortable space that way, and the growth certainly Q4 will be better than Q3. That is, we are sure, and we feel more capacity coming up, and so it will be much better than what the growth you have seen in Q2 versus Q3. That will be better trajectory in Q4.
Fair enough. And what's the outlook then in terms of in comparison to, domestic and your international revenue? It seems like international is lagging behind in terms of percentage growth. Any challenges that you're facing there?
No, so Q3 in international always remain moderate due to the calendar year and in the international market. From Q4, it will be better. And overall, if you look at the year-on-year growth, we have achieved almost 15 to 20% growth in the overseas market also, and that will be continuing in the upcoming period also.
Fair enough. So, given that the company has also been actively working to increase their presence in the non-auto space via various segments like railway and oil and gas, what kind of growth are you expecting? How can we expect the non-auto segment to perform? How much does it contribute to your overall revenues?
So right now, it's about 22% is the non-auto revenue, and the railway, oil and gas, farm equipment, and off-highway. These are the sector we are focusing on, and railway will be a big, I will say, growth story for us. And similarly, off-highway, both will be. Immediate target is to have non-auto profile of 30%, and in mid-term it should be 40%. That's the target we have set for Ramkrishna Forgings.
What about the revenue potential then from some of these segments? If you could just be a little bit more specific, over the next 3 to 5 years from the non-auto segment, how do you see revenues being generated?
So if you look at the current year, we are going to cause almost 7 to 800 crore of revenue from non-auto, and which is likely to grow to almost 12 to 1300 next year. So, and in the longer run, I will say non-auto will contribute quite substantially in terms of revenue. Majorly railway. I will say railway, track, farm equipment, and off-highway. All three will contribute substantially to the standalone revenue, and oil and gas on the console side. So all these will play quite importantly, and we are looking at each one of them at 10% of the revenue in the non-auto sector. So that will contribute to the 40% of revenue target what we are looking at.
What about your recent acquisitions? They aim to foray into the EV and the PV two-wheeler space. How do you see the product mix changing?
See, that acquisition on the EV side is basically a startup, and there we are making progress. But I think that time will take how far that startup will perform. We have ambitious target to develop EXL and motor and controller, not only two-wheeler. It has to be for three-wheeler and larger vehicle. So we will work out the strategy and working on that and with the team there. And I think we are in a good space. It depends upon the market, how it grows and how it takes. So I think it's some time away. We have to relook at it after 6 months or 8 months. Then we will know where we are actually heading in that EV growth story.
Fair enough. Can you just also give us a sense as to what your outlook is on the product mix and any sort of guidance that you can give us?
So no, product mix is likely to remain what I said on the non-auto auto side, that right now 30 and non-auto 70 that. And largely we are a commercial vehicle player, but yes, slowly we are getting some traction in PV segment also. So that is still very insignificant, but time it will PV sector segment will also grow for Ramkrishna Forgings. And overall outlook, we have always given a guidance that we will grow 15 to 20% minimum in volume terms on standalone Ramkrishna Forgings, and the growth from this subsidiary or the new acquisitions will come also. That will you will be able to see in the upcoming year, and 25 FY25 will be the first good year in terms of subsidiaries contributing to the overall growth of the company.
Good to have you on board. Thank you for giving us an overview of the business. That's the word coming in from the management of RK.